What if we had family banks? A bank that has a system that did two things. The first system would lend out money to family members at an agreed upon interest rate. And the second system is that families would invest the money to grow families' wealth long term. And the interest paid doesn't go to corporations. No, 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 no. It just stays inside the family. The banks do the same thing. They just hold all of our money, they turn around and loan it out to other people, and that's how they make billions. Why can't families do that for themselves? So this is how it would work. A family will pull money together for at least a year, okay, 1 year, before they can do anything with the money. After a year, maybe you can borrow to what you've contributed, maybe for a small emergency loan or whatever. So let's break it down on what this might look like. Imagine a small family, like 50 people total, and let's say 30 of them are adults. Each adult contributed $500 a month. That is $15,000 every single month flowing into an account. That is $180,000 a year. So here's how the pools would work. The first pool is a loan fund. This is a liquidity pool that is used for things like emergencies, car repairs, short-term needs, and maybe a small business support. The second pool is an investment fund. This is a long-term pool that is not meant to be touched casually. This is where money plays offense. This is where the money can go into things like a family business, buying other businesses, or buying a business that can work passively, real estate, or anything that can grow the family business wealth over time. So after a year of saving up for the liquid loan, like I said earlier, you can borrow up to what you've contributed. Now after a year of consistency, you've hit a trusted tier. Now you can borrow 2 to 3 times what you've contributed. You have access to slightly higher, larger loans. Now after 3 years of contributing, you can start taking larger loans and bigger opportunities. And I want you guys to remember this. All of this interest is being paid back to the family. I want you to think about that. It's going back to the family. That's a lot of money occurring for a long time. Now, for all of this to work, we need structure and we need a strong backbone system. This is a lot of people involved. And this ain't just regular people. This is family. A family bank needs written agreements that every participant signs. It needs a fixed monthly contribution amount. It needs a clear loan limits. It needs defined interest rates, repayment schedules, late policies that's reasonable, not predatory, but it's still real. An oversight committee, so no one controls everything. It needs quarterly reporting so everyone can see what's going on. And it needs a removable clause for repeated non-payment or abuse, because you cannot let one person poison the whole system. And obviously every family can customize the details. You can set your own contribution amounts, your own interest rates, your own voting rules, your own this, your own that. It just needs a nice framework and a good system that fits your family. Now here's the big question. Where do we keep the money at? Now here's when things get really interesting, because every family is not ready for the same level of responsibility. Level 1 is like this. Everything stays inside an insured institution, like credit unions, community banks. The money will be held in like a high yield savings account, and the investment pool will be put into a brokerage account or a legally held assets for investment fund. Transfers are easy, audits, tax reporting is clean. For most families, this is the smartest starting point. But let's be honest, things can still go wrong. A bank account can temporarily still get frozen if transactions look suspicious. Not because banks are evil, because they have fraud systems and regulations. A family committee can start playing favorites, people can start arguing if the rules aren't clear, and if someone defaults on a loan, it can create tension real fast. So at level 1, the biggest risk isn't usually the bank, it's a weak system. Level 2 would be like a hybrid system. That means the money stays inside of an insured institution, but a portion of it is held outside somewhere. This is where a family might say, okay, we want emergency reserve that's independent. So maybe 80% stays inside the insured institution and 20% is held outside in some form. But level 2 does come with risks. The moment the money leaves that bank, you leave automatic protection. Physical reserves can be stolen. Assets held outside can be lost without proper documentation. People can start fighting over who controls the access. And if there is no insurance on those assets, one bad event can wipe out the whole chunk of the system. So at the level 2 hybrid system, protection has to grow with the independence. That means dual control access, a clear chain of custody records, and regular audits so nobody has to just trust anybody. Now level 3 is the fully independent model. This is where no traditional banks are involved at all. No FDIC insurance, no banking infrastructure. The family becomes the institution. At level 3, real world problems could be a serious threat. Theft becomes a bigger risk. Fire becomes a bigger risk. Natural disasters. If loan records get lost. So for this kind of level of independency to work, you will need a commercial grade vault storage or a professional fire rated safe. This means you're not putting cash into somebody's house. You will need multi-person control, meaning no one person has access to the funds alone, ever. You need access logs, you need rules, you will need insurance that specifically covers theft, fires, disasters. You need regular third-party audits because trust alone without verification is just hope. Even without banks, every loan still needs to be a written contract, every payment needs to be recorded, and every agreement needs structure. Now here's the point of this entire video. This isn't being anti-bank. This is understanding that families can design systems instead of operating as isolated individuals. Level 1 builds structure through institutions. Level 2 builds resilience through diversification. And level 3 builds independence from the system. The question is, which level could your family handle?